Hey everybody, it's Eric. We're going to walk through a trade recap that I took on Monday on the week of March 6th. So this would have been Monday, March 6th, 2023. This is what the forecast looked like for the day. Now this isn't the best trending pattern that I'd like to see. The forecast was showing sort of a push in the morning and then really just kind of a choppiness with general bullish upside and then a potential fade in the afternoon, but then it kind of curled back up. So even though this isn't the strongest pattern for picking a direction, it's still something we can use as a reference when I go to trade. And I'm going to show you how I traded that. So first of all, one thing about Mondays is that a lot of times there can be news over the weekend. And this has been true more so in the bear market. I really like to let the first 30 minutes play out to see, is the market reacting to something like a gap? Maybe there was some news over the weekend or a report or something like that. So I typically like to let the morning session play out and then see what the late morning tends to do in the afternoon. So that's kind of what I'm going in with when I see this and just some general things that I think about. So when I'm actually watching the chart for the day, I'm going to be looking at market net flow. So here is a screenshot of market net flow for that day. I do not have the GEX levels on. I'm going to flip to that in just a second. But the market did gap up, and I'll show you the actual chart, candle chart here in a minute. But the market gapped up. It opened and started to push higher in the morning. And then we can, kind of see the pattern from the forecast, just kind of a general push upwards, very, very choppy, and then it started to fade. During that time, market net flow was, relatively mixed. There wasn't anything extremely dominant. We did see puts sort of go positive, but magnitude-wise, it's very little. It's under 5 million. That's not very much, and calls were down. So this really isn't telling us that much. I was actually going into this day thinking that I might go long in the morning. So that actually would have been a good trade. The forecast was actually right. In this case, market net flow kept me out of that long trade because the puts were above calls. So I didn't really think that this was, the best trade to take. In hindsight, had you used the forecast on its own, which I don't normally recommend, this actually worked out pretty well. You could have gotten a decent long trade. But I like to have everything sort of in confluence. That's when I feel better. I can take better size. So I waited, and ultimately, as we started to reach these levels, this was about 407.5 or so on SPY. We had a little double top, and we pulled back. But then later in the morning, close to the lunch hour, the puts really started to rise, and calls actually went negative. So this is telling me that the market is turning bearish. And if we saw the forecast actually projected a late day fade and potentially a curl back up. So at this point, with market net flow going, more stronger bearish, and with both calls selling off here, calls were basically flat and they were both positive. So this is giving me some confirmation to look for a short trade. I actually went short in this time frame, which is just before the 12 o'clock hour. And I'm going to add on the market net flow with the GEX level. So the GEX level at that time was 407.5. It's hard to see here, which is why I showed it in a different chart. But with the GEX level acting as resistance, I felt confidence that with calls selling off and puts rising, the GEX level was probably going to hold. 407.5 is about 40.75 on the SPX itself. So if we flip over to the actual chart for that day, this is the candle chart. I know we have the SPY chart, but this is the actual SPX chart. So again, we had the gap up, we had to push higher into the GEX level, which is not always, it doesn't always line up with SPX for, I know SPY is a 10th of the SPX, but it can vary within a few points. But in this area is where I took the trade. Remember, puts were rising and calls were selling off. At the time, the market was trading at 40.72. So when I entered the trade, it was actually out of the money at 40.75, and I got $1.90 in credit. And then I held on, and yes, it goes in the money, but that's okay for me when you're trading at the money spreads, because I'm basically looking for a delta kind of move. And within about an hour, or about an hour later, the market had dropped down to 40.61, which is 20-point move or so, give or take from the peak here. Actually, maybe only 15-point. But that was enough to drop the value of the call credit spread. I sold it for $1.90. The value dropped to $1. So at that point, I went ahead and closed the trade because I'm close to 50% of the max profit in this very, very short window. Now, in hindsight, the market ended up rolling over and continuing to push lower. But if I look at the forecast, the fade wasn't really supposed to come till later, and there was actually this curl up. So, when you're looking at the forecast and you're seeing that the kind of chop around is only, let's call it from the up 20 to maybe down 10, you're only looking at a 20-point move, the average move. I wasn't super confident at this point in time that the market couldn't retest this and then maybe roll over. So I was in my mindset was like, well, let me take the profit. And if we rally back up at all, maybe I can look to take a second entry. Or if market net flow turns bullish or something, maybe I could go long. But so I'm happy with getting one good trade a day if possible. Sometimes you don't get a trade, things aren't lining up, and that's okay. Sometimes you got to just wait until everything's lining up if you want like a true A+ setup. So if I was to grade this setup, I'd probably say it was a B or a B-, because again, the forecast was very, very choppy, but I'm looking for opportunities to trade in that direction. And I was able to pull out a win. So hope that helps, and we'll see you in the next video.